Here we are, March 14th. Happy Pi Day to everybody. So we're looking at a uh, couple macro tidbits, and then we'll look at a couple trades that happened today. Big market bounce today on Pi Day. So first thing I wanted to look at is the real-time SOM rule. So a lot of people that are very bearish in the market have been kind of saying that since the SOM rule has been triggered, so it's 0.5 level on the SOM rule, then we should basically be having a recession very shortly after this is triggered. So we saw that in 08, 09, the tech bubble, early 90s, etc. Now, there's been a couple of instances where the SOM rule broke above, not the 0.5 necessarily, but almost there, and didn't have a recession follow. Once was in 04, of course, the recession followed much, much later, but that didn't really trigger. That was coming out of a recession, right? And so the SOM rule, even though it's still high, that didn't lead to any recession, right? And there's a couple other instances, like in the mid 70s here, we had a bounce and then there was no recession. A recession occurred many, many years later. Now, could we be in a situation like the mid 70s or the mid 80s, perhaps, where we have a little bump and then the recession follows a few years later? That could be the potential setup here, but there's no doubt that yes, a recession will eventually follow, but just when is that recession going to hit? Is it 2026? Is it this year? It's hard to gauge because recessions on average occur about once every 4 to 5 years on an average scale, but there's a big gap between certain recessions occurring. So it's hard to say, although all the economic indicators recently seem to be pointing towards a recession happening sooner rather than later. Sooner meaning maybe in the next couple of years, rather than 10 years. But yeah, and Claudia Som herself said she doesn't even believe in the SOM rule anymore. So it's a very interesting tidbit that she said that. There's a couple of things with the Fred data. So if you look at like Fred housing data, housing data for California, no need to use a revenge wrap. You could just literally look at, oh, here's California housing data, but I wanted to look at Florida housing data, housing prices, housing inventory. There we go. And if I can pull up a 10-year chart, let's go maximum. Yeah, I mean, you see clearly in Florida the inventory is exploding. Okay, we're past the 2019 level peak of inventory in Florida, and the natural thing for prices to do is to go the opposite direction. Demand is extremely low. Demand is very low. Supply is extremely high. So that tells you law of supply and demand dynamics will kick in and prices will fall, and quite steeply probably in Florida and places like Florida, maybe Texas, etc., etc. Timing that price fall, it's not immediate. Usually it takes a year or two for buyers to get the message that their house isn't worth what they thought it was worth. So I would expect bigger price cuts actually in 2026 slash 2027. Not as so much this year. This year the buyers are going to fight and they're going to want whatever it is they think it's worth. But then you'll just see the inventory tick even higher, and buyers will be caught off. The sellers will be caught offside, and just be holding on to their houses. So I see that happening in the next couple of years. playing out. So let's turn now from the macros to the micros. We're looking at a couple of trades that worked out today. So SMH was the first one I was talking about in my prior videos. It definitely had a big bounce today, as we said in the prior videos that it would have some bounce. It wouldn't go into Davy Jones' locker right away. So we did have a big bounce. Now, this bounce is a little bit of a cautious one because there's a new gap, a couple new gaps that formed. One big gap here that formed. We do have a gap above. I do believe we'll hit that 228 level right there on the SMH. So, and resistance looks like 232. So it could go to 228 to 232 in the next day, coming week or so. We'll expect more of a bounce on the SMH. So for just following through, then I would say reevaluate once it hits around that level. Okay, so we'll just keep that on our radar. I'm gonna throw up our normal indicators here. Let's use moving average. Let's go with the RSI. I don't use Bollinger Bands that much, and yeah, I'm not plugging for TradingView either because TradingView now they do all subscription stuff. So I know it's using Yahoo is a little bit clunky, but at least this thing is free. So let's take a look. So we didn't get that cross in MACD yet. It looks like it's impending cross. We're gonna head a little higher, maybe 232 on SMH. So that means you're probably okay for the semis for now, just staying a little bit long in the short term. But then I'd expect a rollover, maybe kind of like a, if I can draw here, this is what I think is going to happen. Though we'll see what will play out, right? I think we're gonna, if I can scroll here, I think we're going to, don't let me scroll this thing. I think we're going to bounce, okay, and then come back down. So like this. So we have A, B, and then C, bigger flush downward towards 200. That's what I think will happen. But time will tell. Let's see about that 232 retest in the meantime. Other exciting trades today, or not exciting, was TTD. We're seeing a complete collapse. However, even though it broke multiple trend lines, we do see this. You got a bear flag pattern, okay? Then it comes down to MACD. And there's a MACD cross there at extremely oversold RSI levels. I mean, even one hint of news, this thing is going to fly up 10 points. So I think the shorts are getting a little greedy in the short term. Okay, getting a little greedy here in the short run. Yes, could it go to 40? Yeah, but I would expect that there will be some kind of bounce, a relief rally. Maybe there's a little gap that exists up in, let's look at a 5-day chart. Little gap that exists at 60. So I think that's a given, that it's going to have a little bounce to 60. And then there's another one, although let's see, I think there was one more little gap in the 70s here somewhere. There's a little gap right there, 67. So I would expect definitely this 60 gap to be filled in the coming, let's say, week or two. And yeah, this one is deeply oversold. They missed the top line by 2%, and the stock is down by 60%. So I think, yeah, it's a little bit oversold at this point. Even RSI is all-time lows, MACD all-time lows. So I think we're oversold, and due for some kind of bounce in this stock. Don't know exactly where it'll go. Maybe it'll bounce to, let's say, 80 or so right up here. It'll test the 50 or the 200. Probably test this 200 first, maybe around 75, and then who knows? Yeah, could bounce down or could bounce up, and refill this gap. But definitely bearish signals for TTD. Farm looks like that short-term signal failed as people piled into semis again. Still watching it. Now it looks like we got this new 50-day support coming up. And over the top, you got 200-day. So that cross looks like it might be in question now. So because of the movement into the semis. The same thing happened with Hain. Hain actually got eviscerated today because people moved into the semis and not into the food stocks. So you saw this come down and this potential bearish MACD cross. So I said Hain is in a bottoming process, so I would just watch it. I think if you can see if it holds this low, you could buy this low down here in 350, or maybe even low threes, but it's in the bottoming process. We don't really have a clear indication it's going to turn bullish anytime soon. But if we do see that rotation happen, I think it's going to come up here and retest 650. And ultimately, as people rotate out of semis, 16. So, but that might take some time as a froth gets ratted out of the market. It's not an immediate trade. That's more of a long view. So what else happened today? So what were the biggest active trades today? We got Rubric, SMTC, active, NVIDIA, of course, Palantir. Intel went over these in the prior videos a little bit. Let's just hit up NVIDIA because that seems to be the biggest one that people like to see anyway. Yeah, so we saw that bounce just like SMH. Impending bearish cross. Want to see if that actually happens. I think we'll come up here, test that 127, and then it might even pierce it a little bit. But then I would expect that we would roll over. We got the dividend paid out, no reason to hold. So we'll see probably a little pop, maybe even to the 130 area, and then I think it's going to come back down. But we'll watch it. In the short run, looks like it might run a little higher. How about gold today? Did gold pop today? Let's take a look. Gold popped a little bit. Yeah, new all-time high here for gold. It looked like yesterday, and that bullish MACD cross. So still looks bullish, but I think it's in a bubble. But trend is your friend. It is still up in an uptrend. Still can head higher, even though it may be in a medium term to long term bearish cycle coming up. Yeah, other ones, EBS is one other one that we were watching. A little bounce today. We're watching that bearish MACD cross. There's a bullish MACD cross over here in contrast to the bearish potential signal of the moving averages. So one to watch very closely what's going to happen here in the next week. It's going to be an exciting week for this stock because you have a bullish MACD cross, but the bearish moving averages. So something's got to give. Either we're coming back up here, popping down here, or we're going straight into Davy Jones' locker. So we'll see what happens with this one. It's going to be an interesting watch here, wait and see. So we got about a 50-50 shot on this one. It's either going to be a big winner or a big loser. I think a winner is Baba. We're seeing Baba has some bearish MAC, but on the moving averages, we're looking very good, very bullish. We see this long-term moving average looks like impending golden cross. I would see this thing flying up into the 160s at least. I would see this kind of bearish, bullish flag here and formation, and then right up here to probably 160, 180. I am very bullish on Baba right now in the short run. And go to same thing. You see accumulation levels that are like right around $8. I mean, this thing is primed just to break out, pop out of the 50 and 200, and just go on a tear. That's my opinion. You have a little bull flag here happening. As long as this holds and you can see it pop above these moving averages, I think we'll have maybe a retest and then off to the races. But that's just my opinion on this one. Take it for what it's worth. And yeah, so very, very bullish on that one. In that same space is Tal. Tal, you seeing some accumulation here in Tal, so it's got $13. Um, but yeah, it's exactly the same pattern as GoTo. GoTo is now breaking just above the 250, and this is the same thing. So I'd expect a bullish continuation for both Tal and GoTo. How about EDU? EDU looks a little bit more bearish. Looks like we're below the 50 and we're hugging the 200. So a little bit more bearish, and we see distribution happening on the RSI. RSI is heading a little lower. Um, could we see it bottom out here, have support, gain some traction, then these moving averages turn around and head higher? Absolutely. But I would stick with Tal and GoTo. Those charts look pretty solid. Let's go Freeport Mac. Freeport Mac bearish. Looks like right away off the top. I haven't looked at this chart in a long time. So this is a fresh take. I'm seeing moving averages heading lower, below the 50, below 200 bearish signal. Nothing telling me, I mean, so those are the moving averages heading lower. MACD looks like maybe pop, but it's getting rejected. Yeah, this doesn't look great. This chart looks pretty weak. I would stay away. Yeah, you might get a pop up a little bit, but nothing tells me that this is a buy. I mean, it's just kind of topping out. We haven't really moved anywhere in years. So, yeah, I would stay away. Home builders were in trouble. So Mac is in trouble. Home builders are in trouble. Yeah, it's not a good sign for the economy. We're probably headed into some kind of recession. But yeah, home builders look short-term bearish. And I would stay away from home builders until you get some kind of bigger flush out of the home builders, KBH and Lennar. So that's all I had for today. I just want to give a bit of a macro view, a couple picks from today, just talk through a few points, and yeah, like, comment, subscribe, and have a good Pi Day. If you're on spring break, have a great spring break all, and I'll see you on the next video. Take care.